Now, this is a definition which is given by the Institute of Internal Auditors. What we will do is we will break it down in smaller parts and understand each of those parts separately. And then when you read the entire definition, it will all make sense to you. Okay, why there is such a definition for internal audit. So if you go by this definition, it starts with, it is internal audit is an independent, objective, assurance and consulting activity. So it stresses, because it initiates with this word, it stresses on the independence of internal auditor and the objectivity of internal auditor. Now, what is independence and what is objectivity? Zara, can you explain?
So, see, independence is basically the internal auditor is independent to define the scope of audit. It is independent to touch any area that is defined in the scope. It needs to have access to the records, physical or even in the form of a soft form, all the records of the organization. It has the right to enter the premises, again well within the scope of work. So that is independence of an internal auditor. The second independence comes from its reporting. Whom is the internal auditor reporting to? If it is reporting to the CEO, it is not independent. But if it is reporting to the board, it is independent. In small organizations, the internal auditor reports to the CEO or the CFO. So it is somewhere considered to be independent, but still the level of independence that is defined here from in the profession of internal audit, is it reporting to the board of directors? Right? This is what is independence. Independence to define the scope, to enter the premises, to check all the documents that are within the scope of audit, as well as its position in the organization. That is its reporting to the board of directors.
So, to summarize what Zara said, there should be no restrictions on the internal auditors. There should be no-go areas. Like, internal auditor cannot ask these questions, or they should not be reviewing these areas. There should not be restrictions like those. When these kind of restrictions start coming in, the independence will be affected. The independence by definition is having a state of mind where you are not influenced by anybody
So
in conducting your work. You should be free to do the thing that you have to do, perform your duties without anybody's influence or without any bias. That is objectivity. You should not have any sort of bias when you are performing your duty, which would be a hindrance in discharging your responsibilities. Take an example here. You will be able to relate to it. For example, you are appointed as an internal auditor in an organization, okay, and your job is to audit the procurement department. Now you find out that one of your very dear friend is the procurement manager in that company. Okay, so in a way you are going to be auditing your own friend. Okay, now think over this. Consider whether you will be objective enough when you are auditing your own friend. Think about this. So when you try to be objective, the hindrances that you will face is, suppose there are issues that you found out, there are lapses in the procurement process, or there are mistakes, there are certain misappropriations in the procurement. If you have to report them, you'll have to be enemy with your friend. He'll be upset about it. So you will have that pressure of your friendship to not report. Under that pressure, you may decide, okay, you should be diluting your observations to some extent. So there goes your objectivity down the drain. So if something is compromising your objectivity or something is compromising your independence, that disqualifies you from becoming an internal auditor for that company or for that function. So you should always be independent and objective. Okay. This is first part of the definition. The second part is, it is an assurance and consulting activity. Now when we say assurance, we discuss this, that management has got these apprehensions, these doubts that they want an assurance on. So when you review, you provide an assurance to the management whether things are functioning okay, fine, or are there any issues which needs to be addressed and taken care of by taking certain actions. That is the assurance part. consulting part is where the management needs your advice as an expert, because you have seen a lot of businesses, you are experienced in understanding business processes, you are expert at even certain other things like ERP systems, or looking at costs or numbers. Management is expecting you to give some advice to them, so you may have certain consulting engagements as well. So the internal audit definition covers both kind of work activity, which is either assurance or a consulting nature.
Then so assurance is basically, you can say, it is defined. There is a scope of work which is defined annually or for half year. It forms under assurance, but consulting may or may not be defined. So a consulting activity is separate from an assurance. In consulting, you're giving advice to the management, and it should not be mixed with assurance. Right? They two are different activities altogether.
Right. Okay, the second sentence of the definition starts with designed to add value. So internal auditor is expected to add value to the client or the company he or she is auditing. Okay, the whole process of internal audit is designed in such a way that it should add certain value. The value addition could be in terms of either some improvement in the business processes, some improvements in the control effectiveness, or it could be some form of cost saving, or it could be some form of improved compliance of laws, rules, regulations. It could be in any form, but there should be some value addition. There should be some benefit that the management should get out of the internal audit. Otherwise, the cost of conducting internal audit will not be justified. If the management finds that conducting this internal audit is not adding any value, they may discontinue with the internal audit.
So internal audit is more of a risk-based audit that we talk about. That means whatever you report, there has to be some risk involved of not doing an activity which is not being performed right now. So if you say that some vouchers were missing, I mean, it could be that you can report those as deviation, but they do not really add value to the organization. But if you identify certain risk which would affect the company, that is where you start adding value to the audit.
So again, since it is a value adding job, okay, once you do it, once you perform and you add value, it will give you some sort of satisfaction as to that you have achieved something. That will give you a kick. So that is another add-on, as we discussed in the introduction slides, that it is something that gives you a lot of satisfaction, work satisfaction.
Yes. So we're stressing more on adding value, because without adding value, internal audit is not effective.
Right.
So adding value is the most critical part of internal audit. An internal auditor stays in the organization only when it adds value to it, because that should somewhere impact the organization in the long run, and it should help the organization in its growth, which is the primary objective.
Right. Okay, and the second part of the sentence is to improve an organization's operations. So adding value and improving the organization's operations all goes together. It is similar to what value addition means. It encompasses within the value addition gambit. The next paragraph, the part of the paragraph is it helps an organization accomplish its objectives. So this sentence is very important. And you would be wondering actually, okay, how internal audit would help an organization achieve its objectives. Because an organization can have objectives in terms of achievement of certain amount of turnover, or becoming a market leader, or achieving so much of market share, or so on. How would internal auditor help an organization achieve these objectives? So the whole logic lies in understanding how the objectives flow in organization, and how does it linked to the internal controls which are audited by the internal auditor. So organizations, when they set objectives, there will always be some risk that would prevent the organization from achieving those objectives. Okay, and those risks are mitigated by the management by implementing internal controls. The internal auditor's job is to check these internal controls, review them for effectiveness. So if the controls are effective, they will lead to mitigation of risks, which will lead to achievement of objectives. That is why we say that internal audit helps an organization accomplish its objectives.
Yeah. So here let us start with an example. Like if a company wants to achieve a turnover of say 400 crores with a profit margin of 14%. Now how this is the objective of the company. So what could affect this objective of achieving the turnover and profit margin? So internal auditor here defines all those risks that could affect its objectives. So each department will have its objectives which is linked to the overall objective of achieving the net profit and the turnover. To take for example a purchase department which contributes to achieving the objectives of turnover of 400 crore. So the controls that are defined in the procurement department, which also includes the risk that the procurement department could face, which would affect the turnover of the organization and its net profit margin. So those internal controls are defined by the internal auditor and they are reviewed to make sure that the overall objective of the company is not affected because of a procurement department or because of a sales department.
Right. So the sentence continues like, it helps an organization achieve its objectives by bringing a systematic, disciplined approach. Now this particular part, systematic and disciplined approach, means that internal audit as a function is very systematic and disciplined. Okay, it is planned properly, it is communicated properly to the stakeholders, and then it is carried out, it is executed in a very disciplined approach. There are certain standards on internal audit which are required to be met by the internal auditors. Those standards are something that could be defined by the Institute of Internal Auditors. Those can be followed, or there could be company level standards or your consulting firm or audit firm level standards which are defined by the management of the firm, which you need to follow. So it is a very disciplined approach. In a very systematic way the things are conducted. That is what it means. And the next part is to evaluate and improve. Again, this links to the first two sentences that we understood. There is evaluation and then there is improvement that it leads to. So that is the auditor's job, to evaluate, assess, check, review, and then present those recommendations in form of improvements to the management. Further it goes, the evaluate and improve the effectiveness of these three things. First is risk management, second is control, which is internal control, and third is the governance. So these three are the most important concepts that an internal auditor should be master of. Okay, so we will be covering an entire module on risk management, there will be an entire module on governance, and there will be an entire module on internal controls.
So you will be hearing these terms quite often, GRC.
Right.
So when you say GRC means governance, risk management and control. So this term will be used quite often in our subsequent slides where you will understand these concepts in much more detail. They are very critical for an internal auditor to understand, to become a good internal auditor, I would rather say.
Now with this whole understanding, now let us read the entire definition once again. I am sure it will make more sense to you now. So the definition is an independent, objective, assurance and consulting activity designed to add value and improve an organization's operations. It helps an organization achieve or accomplish its objectives by bringing a systematic, disciplined approach to evaluate and improve the effectiveness of risk management, control and governance process. So this is the definition of internal audit. I am sure the concept of internal audit so far would be very much clear